How did bandwidth influence the dot-com bubble burst? Imagine a world where the internet is growing faster than anyone can keep up with. That was the late 1990s, when everyone believed the internet would change everything overnight. During this time, huge amounts of money were poured into building new internet infrastructure. Companies invested over $1 trillion to lay down millions of miles of fiber optic cables, which are the thin strands of glass that carry data at lightning speeds. This expansion meant there was suddenly a lot more bandwidth available. Bandwidth is simply the capacity to send data over the internet, and it was increasing rapidly. At first, demand for internet services was soaring. Businesses and consumers were eager to get online, and internet usage was doubling every year. This made investors think that the need for more bandwidth would keep growing forever. So, telecom companies kept building, installing more fiber optic cables, and upgrading their networks. But here is the catch. They built for more capacity than what the market actually needed. By the time the bubble burst around the year 2000, only about 2.7% of the installed fiber capacity was being used. That means most of the infrastructure was sitting idle, unused, and unprofitable. This overbuild had a big impact on the market. The huge investments in fiber optic cables and related equipment caused the valuations of telecom and internet companies to skyrocket. Investors believed these companies would keep growing fast, but that was not always the case. When the demand did not meet expectations, the prices of bandwidth and related assets started falling. As bandwidth prices dropped, telecom companies faced revenue shortfalls, which made their financial situations worse. Think of it like a railroad boom in the 19th century. Investors poured money into building tracks that no one really needed yet. When the demand for railroads did not match the overinvestment, the market crashed. Similarly, the excess bandwidth created a bubble that eventually burst, causing many companies to fail. Even after the crash, the infrastructure built during this period became the backbone of the internet's future growth. The cheap, plentiful bandwidth allowed new online services and applications to develop and become widespread. By 2004, bandwidth costs had fallen by over 90%, even as internet use kept increasing. So, bandwidth played a key role in the dot-com bubble burst. It fueled speculation and overinvestment, but it also laid the groundwork for the internet's expansion in the years that followed. This pattern shows how infrastructure booms can cause economic disruptions but also create lasting foundations for future growth.